So how would you like to win £30,000 in 1 month? Just sign up to this ebook, download it now because it's a limited offer, and well, no, I'm not going to go there. And in fact, most of the videos that I have covered actually tell you in isolation the sort of things that you need to be doing to be able to be successful at trading. But what I'm going to do in this video is explain what I did last month, give you some depth as to how I did it, and show you how a lot of those videos all come together to produce a result like that. So let's explore that in this video. Please like and comment on this video. That will allow me to produce better quality videos and more of them. And if you're interested in learning from somebody that's been doing this for over 20 years, then subscribe to the channel and hit the bell icon if you want notification of new videos as they're released. So the first thing that I want to talk to you about is, bear in mind there is no great secret to trading and to doing all of these sort of things. The great big secret is that there is no big secret. And I actually started at exactly the same point that you probably started. In fact, I started behind because you have the benefit of knowledge, videos, and all sorts of other information that would get you to the first stage a little bit faster. But when I first started, I assumed that the market was random. I assumed that I had no knowledge. I assumed that there was nothing that I could do to somehow sort of find a way around that. And therefore I actually started trading completely randomly to start with. And you're sort of thinking, well, what's the point in that? Well, if you trade at random, you learn a lot about the way that the market works. If you put an order in and you watch the market unfold right in front of you, you can begin to learn to feel and understand exactly what's going on and get some of your objectives. Because your overall objective is to actually be expectancy positive. And what do we mean by that? I'm not going to go into massive depth in this video, but to get a positive expectancy, you need to understand how often you win, how often you lose, how much you win when you win, and how much you lose when you lose. Because it's tweaking those parameters that will allow you to get towards profitability. I've done a great video where I talk about this in a lot more depth. I spent about 15 minutes talking just about expectancy. And if you understand that and you measure your performance, then that will allow you to be able to develop and learn strategies and the way to execute those strategies that will get you positive and in profit in the long term. Because if you are failing on one of those 4 sort of parameters, you can begin to understand why and then move yourself forward. And it's important to understand how to do that as well, because when I first started trading, I basically went into the market. I was doing arbitrage betting to start with. I would go to a bookmaker and lay it off on the exchange. But one day I started putting both orders on the exchange. I would back at the current lay price, lay at the current back price, and then wait for those orders to get matched. That is where I started. It was that simple. And then I began to figure out that, I was sort of arbing almost on the exchange itself. But of course, that is what you would recognize now as trading, and probably more similar to sort of scalping, although I don't think that scalping best describes that. Effectively, what I was doing is I was market making. I was creating a spread and waiting for those 2 orders to get matched. Now, when I first started doing that, I never really made much money. But what I did do was look at all of that data, understand if I modified how far apart those orders were and how they performed in certain markets and stuff like that. That would give me a clue as to what I needed to adapt. Did I need a higher strike rate? Did I need to cut my losses? Did I need bigger profits? That allowed me to get to that first stage. But what it also teaches you if you do this is that it works well in some markets, but not in others. So you very, very quickly realize that in fact what your objective is to match your strategy to the market, or vice versa. As I say, for every market there is a strategy, and every strategy a market. And your job as a trader is to match those 2 up. If you have a plain vanilla strategy and you run it across all markets, it will work on some, but not on others. And what you need to do is to apply that strategy to some markets and not others, because that was exactly what I did when I first started. I was trying to understand why something worked and why it didn't work in another market. And my first step towards profitability was basically just not to do anything stupid. I basically would look at a strategy and say, well, I know it doesn't work when I see these sort of characteristics. So when I see these sort of characteristics, I'm not going to do it. A process of omission allowed me to get profitable. When I traded the market randomly, I won as much as I lost and had to pay a little bit in commission. which meant I lost overall. But by cutting out those big losers and identifying specifically the characteristics as to why those losses were occurring, then I could just focus in on maximizing the markets where that strategy worked particularly well. And then after I progressed that, I would basically sit and wait for those markets to turn up, deploy that strategy, and then I eventually would develop strategies to cope with markets that behaved somewhat differently. So essentially, when you look at the market, and when you look at the market in aggregate, if you trade it at random, what you will find is that you get random results. So your objective as a trader is basically just to nudge yourself away from that and push yourself into a position where you understand what you're looking at, you have all of that data, and then you just modify your strategies or the way that you're actively trading or the process of execution to be able to just nudge that into profitability. And one of the ways that you can do that is by omitting markets where you don't know what is going to happen or where you know certain strategies do not work particularly well. And that was all that I did to basically get myself off of random and in towards profitability. So let's look at that big total. How was that even possible? Well, I have described this in other videos where I've broken down some of the key components to it, but let us look and understand at some of the numbers that go behind this so that you can fully understand exactly how it was achieved. And the interesting thing was that it wasn't some amazing level of insight. There wasn't something amazingly special or clever that I was doing, and I didn't have fast pitches, or I wasn't using a large bank, or I wasn't doing anything weird, unusual, or clever. It was just good trading. But if we look into the numbers and describe how it was constructed, you'll better understand how it was achieved and primarily what your objective is as well. Because when we look at that total, you need to divide it by thousands of markets, because what you're seeing there is the culmination, the accumulation of loads of individual markets that were traded over the course of the month. And when you first start trading, you're probably set on one strategy or tactic, and then you basically would look through the markets and find that opportunity and execute it to the best of your ability, and then wait for the next opportunity to come around. And some days you may not find that opportunity, other days you may have a little run of them. But that was where I started a long time ago, but I very quickly started to try and solve the problems in the other markets. It was like, well, why can't I solve the problem in this market? Why is this not working? What should I be doing? How should I be doing it? And so I started to trade multiple markets. So when I started that very, very first strategy, I was basically hitting the make market button in a horse race pre-off. I was basically just seeing what happened. And what happened was I more or less broke even. However, it became very clear and apparent to me that there were certain races where that strategy just absolutely did not work. So I can actually trade very large numbers of markets, but also thanks to BetAngel, I can trade manually, semi-automatically, and fully automatically. So some of that result is from fully automated strategies that are active and working away for me. So when you look at that total, you need to divide it by 1,000. So if I should have checked before I did this video, but if I traded 1,000 markets, which is too low, that would have been an average of about 30. And if I traded 2,000, that'd be an average of 15. 3,000 would be an average of £7.50, and so on. But basically, you can see that if you trade thousands of markets, your objectives becomes much more achievable, and you feel less pressure as well. You go into the market, you try and do the best you can. Sometimes it's a loss, sometimes it's a profit. And then you just, that market's done and dusted, and then you move on to the next. You don't have to panic about reaching a target. You don't have to worry about a loss that you just made. It becomes sort of systematic. You just keep on plugging away, doing the best that you can, and away you go from there. If you want to look at it in a little bit more detail, if I bring up a graph and we look at the range of -25 to +25, what you'll see is this is plotting the average result around that period. So what you'll find is there is an unusual peak in the middle around 0. And this is because very often I'll start a trade and then I'll change my mind and exit for the best that I can get, whether that's a small profit or a small loss. And I'll just go, well, that didn't work for one reason or another. Or maybe it was a good trade that just collapsed, or maybe it was a bad trade that I managed to, actually not make too bad a loss on it. But essentially, I'm in the market, I'm putting money into the market where there is potential, but very often that isn't working. But what I'd like to draw your attention to really is if you actually look at both sides of the graph, you'll notice that on one side we've got the positive trades and on one side the negative, but you can see that they're not equally distributed. So if I had to tell you, if there's one great big secret that you should be aware of, your primary objective, if you want to make money in the long term, in pretty much any market, is to just be slightly better than everybody else, essentially. There are loads of people in the market, they're all doing all sorts of crazy things. Some people have absolutely no knowledge. In fact, I would probably go so far as to say the majority of people don't do clever things at all. At a base level, they just follow a simple strategy. They don't think it through, they don't apply it to a specific market, and they don't execute it particularly well. And that's essentially where you're likely to make your money, because you're being a little bit better than the average person within the market. And if we're looking at thousands of markets, you can install and use BetAngel on as many devices as you like. We license by username. So what I do is I have stuff running fully automatically in the background while I'm trading manually. And in fact, there's a mixture of different strategies in different markets doing different things at different times of the day. That's working away for me, and I'm actually manually trading the market as well, simply because over a long period of time I've found solutions to problems at different ends of the markets that are looking for different opportunities. So I'll often run a copy of BetAngel looking for a specific opportunity, and that will either alert me or actively trade it itself. If you think about it, it's a natural progression. You go from trading manually to semi-automating some of that to the point where you realize that you can actually completely automate it. So yeah, all I'm trying to do essentially is to be a little bit better than average. And when you look in that overall mix, you're going to get a whole mixture of results in there as well. So the distributions of gains and losses isn't particularly equally distributed, especially where we look at some of the larger results that you get. My worst loss in that particular month was about £500. It was just one of those trades where absolutely everything went wrong. Wrong market, wrong time, entered at the wrong place, did the wrong thing, took the wrong decision, and it all just fell apart basically. But I wasn't worried about that because I knew that I would get a decent trade on the other side at some particular point in time. I just had to sit there, do the best that I could, and that opportunity would present itself to me. And I have highlighted videos before where you can see unusual situations or activity that develops that leads you straight into a trade. And it could be that you just sat behind your desk when that situation occurs and you're ready to go for it at that particular moment in time. So my biggest profit for the month was way in excess of the absolute value of my biggest loss. And that's simply because I'm trying to constrain the losses that I have within the market and make the most of opportunities that are there. But if you want to know what happened overall, basically I did a little bit better than most other people. I would be in the market slightly earlier than other people, spot opportunities quicker. I would execute them better than other people. And that was the difference. The line was quite thin, but that was the difference between one side of the graph and the other. And the culmination of that over a long period of time, over the course of a month and over many thousands of markets, is what gave you that result overall. There's nothing weird, unusual, or special about it. It was just good trading. So to quickly summarize some of the things that we've discussed in this video, there is no big secret. If you're looking for something that will magically transform your trading and turn you into a superstar trader if only you knew this strategy, stop looking. Because the essence of good trading is basically just being a bit better than average. That could be in terms of identifying the opportunities, the strategies that you're using, the way that you're trading it tactically, and by that I mean an execution edge. I've given you some demonstrations of this on other videos. But by being slightly better than somebody else within the market, than your average Joe, then basically that will allow you to get a slither of an edge, even if it's tiny. Over time you will get better and that edge will get larger. But as long as you execute consistently against that and you're looking for those opportunities, you know and understand why and how to make the most of those opportunities, and you repeat them often enough, then all of those little totals will soon add up to something much, much bigger. Now, because I've been in the markets for so long, it's sort of second nature to me. And when we look at this particular month, this was one of the bigger months that I would expect over the course of the year. I will do fine this month. Don't you worry about that. But necessarily you will have peaks and troughs where the opportunities are plenty or a little bit more sparse. But as long as you trade consistently, then there's no reason why you couldn't be profitable too. And if you look at where I started, if I had to start everything all over again, I would start in exactly the same place. And if you look what I do during the week, every Monday I'm sat down looking at the data from the prior week in the same way that I did 20 years ago when I started, to have a look at what the market's doing and to figure out if there's another strategy I can deploy, an amendment to something that I'm doing already, and progressing things from there. So almost essentially you would be starting on the same level as me, because I'll be looking at exactly the same data and trying to progress things from there. And you know, I will often try and develop new things as well. And there are certain markets that I like and don't like. So there are plenty of little niches for you to occupy, depending upon your ability, your knowledge of a sport, or your ability to trade it. So yeah, you know, that is the sort of story of how that monthly total came around. There are many facets to it, but giving you a deeper understanding of it and some of the detail behind that, I hope will make you a better trader.